looking for this entry.
There you go.
So we were talking about looking for entry. 1, 2, 3, 4. We could possibly look to enter on a close below that one there. So this candle with a stop. Your stop's going to be up here somewhere. And you potentially enter in there, which would correspond, possibly to that there. I don't like it. We got a similar sort. That's an inside. So we've got 1, 2, 3, 4, 5, 6. So I'm looking at what the penultimate candle is in this case. So it's this one. So, there's another potential trigger there, depending on where you are. You might have missed this point over here. It looks toppy to me anyway. The whole setup is looking good to me. Let's have a look. And, so to me, that looks like bearish divergence across that anyway. So, it just depends on your appetite for risk, that kind of your position size and distance to what that stop is. What I'm saying is there's options there, over a period of time. And what is that? So from there, so a 4-hour period. That's not too bad. And what are we looking at? So there's my fib. Taking profits. God damn.
Beautiful.
Is that 61? Yeah, it is beautiful.
Like magic. It comes and touches it, and that's it.
Yeah. Because 61.8 is, they call it the golden ratio, right? The amount of times I go, oh my God, it's like every time, and you miss them as well, right? You miss them. Not so much in that setup, because that is the setup. But let's say, you arrive at your desk first thing in the morning, right? There's nothing on. There's no setup there. There's a move which maybe started, whatever index it is, but it started before you arrived at your desk. You think, right, okay, I'm waiting for that pullback. And you start getting the pullback. It hits the 38. You think, maybe there's an entry there. It's like, oh, I'll go and get a cup of coffee. You come back and, it's what we call them lizard tongues, those big kind of wicks. It's like, it comes out, it grabs it and does its thing. And it's like, damn, I missed it. But like buses, or like the clock goes round, they're there. It just, you do the work, you put the time in, and you get to see them. If you want, Patrick, we can do something on that, specifically in how we can measure the Fibonacci and use the Fibonacci as a tool in either an uptrend or a downtrend to, you touched on this earlier on anyway, but to get entry into that trade. So you kind of treat it's sort of a reversal, and you're not risking the breakout, if you know what I mean. You can even take profits at the breakout, trap someone else.
Exactly.
Say that, should I?
Well, that's because the classic thing to teach people is play the breakout. But honestly, I've realized that the greatest gains is not on the breakout. It's if you're able to spot the turn. I know it's people say, catching a falling knife, but there's nuances to that. You're actually spotting smaller time frames and then bigger time frames trying to turn up. There's like you said, there's a science and there's an art to it. And then when nobody wants it, especially psychologically, because when you're buying, people are probably in the marketplace probably have the opposite opinion of you, right? Which probably
Yeah.
gives you comfort in your trade. But when the breakout happens, of course, it could be momentum, bring it up. But I often feel that a lot of the fuel is already consumed, and people are starting to understand. Like when the crowd gets in the trade, it could drive it up still some more. But the greatest percentage gains happen when you catch it on the turn. That's what I like about harmonics. They get you in the trade when everybody's super scared of getting in. It's an awesome place to be.
I think so. Yeah, it does take practice and patience. I have, they say in investing, right? You've got to be patient. The rewards will be there. You just got to kind of wait it out. Or I heard you talking or maybe last week, and you've been through the penny stock thing, right? We've all been through the penny stock thing, and it's the same things that I said over and over and over again. The real patience, I think, is your patience in entry. And I think this gives you the framework for that. Because you don't have to dive in, because these opportunities, they're everywhere.
Yeah.
I mean, they literally are everywhere.
Yeah, and I think that's the hardest part. A new trader thinks that this is the only time. And guys, even on horizontal breakouts, within 80% of the time, there's a retest of that breakout line, like months later. So like on that time frame. So if you know that these setups happen over and over again, why psychologically it gets so much easier to resist that fear of missing out?
Definitely. I had my last meltdown. We all get meltdowns. My last meltdown was in February this year. And up until that, the end of last year, I had a great run. And I don't really know how I managed. I know what I did wrong, but I don't know how I managed to get myself into the position of doing something wrong. It was rather silly. And basically it was to do with, I wasn't in my own zone. So you remember when I sort of said about work your own charts, do your own work. It was sort of a hybrid type place, and I paid for it. And I'm not going to do, that was the last time I did that. It caused a bit of a meltdown. I thought, right, that's it, I'm done. Actually, it wasn't, and I'm done. It was, I need a break. So I had a break. I took a couple of weeks off. I thought, I don't need to do this for a minute. Just deep breath, get back to it, work your charts, do your work, and then it'll start rolling again, and it has. I really love what I do. I've always liked what I do, but I really love what I do now.
Yeah, and I think you need that. That's what if you love what you do, it's not work, and it'll permit you to put the tens of thousands of hours, because guys, everybody could relate to that who's in let's say, I don't know, I don't want to diminish, let's say working at Starbucks, but after 35 hours, I'm out of there. I don't even want to hear about serving coffee. That's not, you're doing something, it's a means for an end, but to be really super proficient at something, it's 80, 90 hours a week. It's your life. You sleep about it. I wake up, I have ideas. I have to write them down. Okay, how does that chart relate to that one? It's like, it's nonstop. My girlfriend's going to leave me, she's like, Patrick, you got to stop. It's like a madness practically.
Absolutely. It's important to have your time away. And I think it's important to recognize when you need to do that. I think it's hard. It's hard to step away, but I think it's always better to step away in your own terms rather than being batted out of the room, sent away or whatever, like what happened to me in February. And right now, for me, I trade a lot less than what I used to. am I allowed to say this? But I make more money. I'm a bit more selective, I think. And again, I think it's because of the way I work, but because of the framework that I have adopted. And that's it, guys. And there it is, 38.2, 61.8 have been hit off that Gartley. You might want to leave some on the table. There is another target. We can go down to the 127, but I think that price action there probably tells you, and that structure, not to do that. We've got some kind of weird inverse head and shoulders thing there forming, maybe.
Man, okay. And you're doing this on the smaller time frames. That's what I love about it's like yeah, it works on any time frame at all, right?
Yeah. I tell you what, I probably should finish this. What we got? A couple left here. Okay. So let me just switch that off. And just to show it, this is a classic example. Actually, forget that one. Oh, that's just to do with channels. I tell you what, if you're interested, we can have a quick look at gold.
Yes. Because that is definitely on everybody's mind. Well, at least a lot of my Twitter followers, they're interested in gold. And gold is such like a macro. I know maybe for swing traders, it's less important, but scalpers, but on the macro wise, what happens to gold, it tells a lot about what's happening with everything else, right? But
what I've done here, but I mean, a lot of these were made a long time ago. I'm a gold bug. I'm really interested in what happens to gold. I'm invested in gold. I own a little bit of silver. For me, I think the gold thing tells us sort of a bigger story of, essentially what's unfolding and has been unfolding, for a few years. Okay. How are we going to do this?
is there, while you set that up, did you ever fall in the trap or it's like when, let's say somebody learns about head and shoulders, he sees them everywhere, right? Is that like, I'm afraid that sometimes I do harmonics, I show them to Kevin, and it's like, I'm just trying to find them. I'm forcing, the pattern where it shouldn't be, right? I think that's like a trap for newbies.
I agree. I think so. Wall Street, FTSE, or whatever, whatever exchange, whatever it is that we're talking about, it knows that there are probably a lot more PIs, traders, because of all the platforms that are available that can interact with the market. I mean, obviously you're on a different time frame to me. I always find between 1 o'clock and 2:45 a really interesting time over here in the UK, because I'm watching what's going on in America. Because if you look on those really small time frames, I mean, it's crazy. These candles are forming and you can actually see the thing going, and And I said, whoa, it's like kind of walking off, you know, all of a sudden you're walking kind of on a lovely day, country path, and next thing you're on the bloody freeway. It's crazy. There's these things coming at you from everywhere. And I think it relates into those kinds of things. So, you know, people get trapped. Traps are set. Although I would say recently, probably a couple of months ago, I spotted Head and Shoulders on the NASDAQ, which is playing out now. Over on one of the platforms that I trade on, you can't trade the NASDAQ, you trade a different instrument, which is the NASDAQ, but it's kind of called something else, and there's slightly different constituents in there. But that pattern played out there. I don't know what the reliability is. I've not traded them enough. Like I keep saying, all of this is all a guide. It's all hopefully to allow us to make informed decisions and inform us of what those probabilities are. And when we get it right, we get it right. We get it wrong, we move on. You know, as long as we set up for that, and we're set up properly in the way we manage what we do, our business, right? You know, we've got to be professional, which means, you know, we manage our money, we manage our risk, and we manage our positions and our head. Okay. So I'll probably I'm just going to pop this down to the 2 hour a sec, Patrick. It might be. So this is called an ABCD. You know this pattern?
Yeah, well, yeah. I started when I started looking at the harmonics, it's I was going through all the tools and I popped it up there, but the ratios are the same, right? It's like a
reciprocal.
Yeah.
So the move AB is equal to CD. I say equal. There are those that would argue that it's actually only specific ratios within there.
Okay.
I think 16161, 78127. I think, but you know, it'd be like looking for a needle in a haystack. To look for those things all the time. It's reciprocal. It is. After reading this book, she doesn't discuss them in that way. They call something a little bit different. I think she refers to them as symmetries, which essentially is what it is. But we have an ABCD. That, in my view, is tradable. Just get that right. It's the same again, 3861.
So that would have been the targets for that move.
Yeah.
Beautiful. I like that, the fact, because I was looking for these perfect ratios doing harmonics. I couldn't find any like perfectly. Oh,
You're back. Good.
Can you hear me?
Yes. Yeah.
And I couldn't find them anywhere, these perfect stuff. But then so it's, I'm happy to hear that it doesn't have to be perfection, because that human emotions are not perfect. So why would it always be perfect? It didn't make sense to me.
I think there's something to be said for that. I mean, we're looking for as close as, to me, with the harmonics, it's the B point. Okay. My price reversal zone, you know, there's scope within that. There's a tolerance, right? There is a tolerance on my B as well. I mean, Patrick, I've actually made my own tool. I'll send it to you.
Yeah.
It's a spreadsheet that basically lists the ratios. I select the B point. It tells me what it could be.
Oh, okay.
Yeah, just basically filtering out all the other possibilities. So then I say, okay, I measure and I look for. I've also got, something like that. A friend give me this. That's on my desk constantly. And there are other tools that can help us. Anyway, let's have a look. What else we got? So these are previous winning ones, right? Maybe not the best. So we didn't. So that's a previous harmonic. It's, I think, on a smaller time frame, you might have a trade out of that from there, but that's gone too far to do anything there.
So that W, it's not playable. It never existed, or
it went past the price reversal zone. I've tried to organize them. So I've got future harmonics, and various things. I've obviously dropped that into the wrong one. There we are. There's another ABCD there. What can help you with this is one of the things that I do. My mentor showed me this. He showed me that method. Let's sort that out. And you can.
Yes.
Yeah, quickly. Yeah. I prefer this.
Yes.
Simple. Because it's quite hard to join. If you use TradingView, you got those little circles at the end, and you never know if it's on there. What else have we got? Oh, we got another one.
Oh, again. Oh, what's that? Sorry.
Oh, hello. Oh, there was the one that caught that. That was the one where I traded. Yeah.
Is that the crab?
That is crab.
Yay. Because I remember the crab, because it's one of those with like a stretched leg,
yeah.
Right?
Yeah. Beautiful. I remember on the morning I seen this one, I had an alert set and everything. And I said to a couple of friends, and I said, you know what? I don't know. I said, everything that's going on in Ukraine and this kind of macro event that's taking place. I mean, look at that move that gold did. And then I thought, nah, after a move like that, you're going to get some kind of retracement. You may not catch it, but it's worth the risk. Risk reward is pretty good. It was. Ish. It's valid. We're in that sort of Gartley zone. You have the reaction.
So am I seeing an M now? No, you're not even considering an M building out.
Over here?
Yeah. So let's say I'm a rookie. I see that, and I want to see, in my head, I want to see a bullish scenario for gold. And I'm saying, well, that's X. Yeah, where you mark the D, that would be my A. Is there like an M there?
So I have future harmonics. So what we'll do is,
there's my M.
Yeah, I mean, look how many D's got hit there, but you're right. So,
or it's a crab.
Bat. So let's look at these one at a time.
So you have multiple scenarios, and as the time moves on, you see which roadmap is the most probable. That makes total. I love doing that.
Yeah. So that's the potential bat that we're looking at. So reversal zone 1721. I'm not sure how that aligns to your work. I love your arcs, and I've always thought, how can I you know, where you get the bounces on the arcs, are they corresponding to my reversal zones?
Probably. Or that they definitely have a higher probability of being that same confluence of area for sure there. Nice.
It's a slightly alternative pattern, but again, it give confidence because we had the other pattern that was there. So I've got two. When that happens, we call that confluence. It's a number of, you know what it means, converging at the same place, you know, which gives us more confidence, you know, that we, you know, to take a trade. Butterfly. This is an interesting one. We've almost got this flat bottom thing going on there. We had the little discussion about, you know, where's that swing coming from, right? Because I see this B point there, I'm happy to go with it. I'm happy to go with it. Others might not be. I'm happy. I would have been right.
So you could have played this two ways. When you get the C, you could have went long until you hit D. And when you hit D, then you could go short.
So let's switch that off. That's a good question. I think, I'm not sure. I wouldn't be using the harmonic as an entry on that C point, but why not a double bottom? Why not? I mean, do we have a reciprocal in there? Just move that out the way. Very quick way of checking this. No. It's not too far out. I mean, you're in that area, but what are we on? We're on the 4 hourly. So are you catching that really?
Yeah, it's crazy. Yeah.
You know, I'm nimble, but not that nimble. But you might have taken this one.
Bullish divergence on the MACD, right?
That's all you need to know. Yeah, so let's lose the fib. So write it down now. We're going to reverse at 23.15 at some point in the future. When I say reverse, don't forget, you know, I'm not saying anything. I'm just saying you're going to get there's a probability, a high probability we're going to get some down move there. I'm not saying that, all that. I'm just saying a downward move we measure. And you know, the beautiful thing about this is it allows us, when I say nimble, it means I can change my bias.
Yeah.
Yeah. Just because I'm, you know, long-term bullish on something, it doesn't mean that within smaller timeframes, you know, nothing goes into any direction in a straight line is the point we make, right? So you can.
Man, yeah. That we can't say that enough because a lot of people have difficulty. I show long-term bullish charts for, let's say, gold, and then shorter term, I show bearish chart. Patrick, you're flip-flopping. No. It's like I'm not allowed to show a bearish chart of gold and silver when on the daily they're going down, but on the long term, I think they're going up. Like, yeah.
I know. It's I've had many similar conversations. Okay. You know, we get a Gartley that's playing out there. There's a crab, perfect crab. Damn, that's a perfect crab.
You're saying it's perfect because you know the ratios by heart, and then you know that these are respecting the ratios.
Yeah.
So it's played. Has that crab played out? If it does 38 or 61, it's played out, right?
Yeah. It's done exactly. And look at that. It catches the 78 for a bounce. That's the other thing about the fibs. You know, get that right. It's surprising. Well, it's not really, not anymore. It used to be, but not anymore. I mean, look, there's the fib. We draw the fib, C point, swing low, up to our price reversal zone. Look at the 50, 38. You know, there was something going on there. It's respected the 61 in this area, but finally it had broken through. But whoa, obviously there's a little fight going on there, a little trend line I drew. Now, there was a, why did I? Okay. Show you something else. Sorry. Okay. So we were just, is there something of interest here? So we got 60. Damn. Bat, isn't it? I mean, I got to make sure I'm accurate here.
So from A to B, it's 61%, 61.8 is a good, is that a good, that's in your range for the?
No, if it pops over 61.8, well, if it pops over 50, really, you know, you're out of that bat range. But there's a tolerance. Okay, so you know, you should respect the wicks. I do respect the wicks. But that doesn't mean to say I can't play with the, excuse me, I can't play with the idea of the fib forming somewhere else, which would give me an indication of an impending move, right? It might not have the impulse to give you the 38.2, and this comes back to how you manage and experience and all the rest of it. You know, I can't emphasize enough that charts are not perfect, at least not for me. You can get the perfect crab. I mean, if I wanted to, I could probably whinge a little bit, you know, I could probably say something negative about that. But I look at it, I think, well, you know, 1612, what more do you want? You know, off that B range of a 0.6, you know, it's virtually there. Are you not going to take that? I've told you the reason why you potentially wouldn't take that trade, but if you are pure harmonic and you look at that, right, we're on a 4 hour. You know, let's take that down to, let's go 1. Multiple. I mean, there's options all over the place as far as I can tell there. 1, 2, 3.
Rising trend line break, pretty clear breakdown.
Yeah.
Because I'm seeing it through my eyes. Yeah, there you go. Like that's pretty clear cut. And then even a horizontal at 2030, there's a clear breakdown. That huge, like almost Marabuzu candle, red candle is telling you like somebody's dumping, right?
Oh, we know who's dumping. Paper.
We could have followed whoever was dumping. We could follow their lead because now that was a clear signal that that's it.
I've done that. I've actually done that. Gone short gold when I feel, oh no, it's not when I feel at all. This is not about gut instinct. When I've seen what I think is those guys doing what they do with the paper. It was, if you remember, it was either just it was just after Christmas. I can't remember if it was before the New Year or just after the New Year. Probably this year, is it? No. I think it was that. It was this. Yeah, there you go. That little structure there. I caught that. That wasn't harmonic. That was just someone's dumping. No.
Rising wedge broke down.
Yeah. Yeah. Yeah.
It's so man, I wish that on anybody there to fall in love there with TA and find a technique that it suits them, because the technique also has to fit your personality, right? So if somebody loves these Fibonacci's and is not dyslexic, maybe like me, and it clicks, go run with it, you know. If it's classical TA, and if you're able to use like combine both, I think you're even more versatile. If you have the time to combine harmonics and classical TA, man, Jesus, like you're a one-man chart trading army.
Yeah, that's sort of feels like that at times. You know, I mean, you have bad days, you have good days, right? That's obvious. I mean, but sometimes I have to check myself. You know, it's like it can be a little surreal sometimes, and I question myself why that. And this is dangerous, by the way, I think, because it might encourage recklessness. But you know, I sometimes question why I do other things. What I mean by that is, you know, why have you invested in company X? Why do you put your pension in company Y? You know, this is working for you. Why would you? And then it's like, no, you know, you need to, you carry on what you're doing. This is all about the account. You're building your account up, and then you can enjoy something, you know, whatever that is. Nice evening with the family. I don't know, go and buy something for the kids. You know, whatever. You have to enjoy it as well. Is the point I'm trying to make, right?
Personal growth. It's like, yeah. I always like, if somebody could give me a Lamborghini, it'd be my childhood dream, but after a month, I get used to it. I get used to the dashboard and, oh, okay, it's Lamborghini. It's fun. These incremental rewards, right? Challenge reward. Yeah. You don't need to go to this, like at the end, like life is small challenges you overcome until you can't overcome anything anymore. Like
I wholeheartedly agree with that.
Yeah. But if somebody does want to give me a Lamborghini, I'll take it. But but it's not as, you know, it's not gratifying like what you're doing now, you know, trial, error, success, failure. Then you, like, Jesus, one day you're going to look back at Costa and you're going to say, oh man, look how much I grew. What I thought, how good I was or whatever 5 years ago, I knew nothing. Because I know that me at 46 years old, like I look at my 30-year-old self and I say, Jesus, Patrick, you were such a newbie. But at 30, I thought I was so much better than when I was 20. It's like, I know that even when I'm 50, I'm going to look at 46, Patrick, man, you don't even know what you're doing.
Yeah, and you've nailed it. Personal growth, right? You don't, the moment you think you have this nailed, I think.
All right, guys, man, it's just, I could talk forever, guys, to Costa. Like, this is so interesting. And like you kept mentioning, Costa, it's like, it's not just a trade chart framework that gets you hooked. It's like the candy, right? You think you have a rocket recipe, but after that, it's emotional capital. It's everything else around the actual chart trading framework. Because I think after that, it's hard to be a trader because we're designed to self-sabotage. It's a constant fight, right?
Definitely. I mean, for me, so what to rule out of your sort of your being, your makeup, right? And recklessness. You mentioned it earlier on. You know, you lose a trade, you double up in your next one. I mean, that's most definitely not the right thing to do. There are things that we have to shed, you know, or shred, or whatever the word is, and there are things that we need to add to us. For me, it's, you know, as I've mentioned, it was finding something that worked for me. That was my dog, sorry, named after Forrest Gump, because he likes to run. And, you know, we don't stop to learn. You're right, you get hooked, or you can get hooked on this, but you've got to be hooked on the growth aspect as well. Don't be hooked to trading. Be hooked to how you could improve. Ideally, all aspects of your life as well with it. And you know, you've got to have that clear mind, that be in a calm state when you are taking those trades. You know, you mustn't be anxious. You mustn't, you know, be any of those sort of have those negative vibes around you, that all of that kind of stuff. And it does take time. It does take time, because you have to develop that belief.
Yeah, it takes time, guys. It's like, you can't be a surgeon overnight, and people, it takes time. And if you can't sleep at night, if you have like, you know, you can't sleep, you're probably over leveraged. I learned that early. Like, I didn't know about money management. And then during the night, I would get scared of my investment. And then the next day I would close it. And then I realized it's because, like, to just put you know, like you said, money management, to each their own. But if you can't sleep at night, definitely because you're too leveraged, or you have too much stakes there in the in your trade there. Definitely,
money management and risk management is vital. We all have a different tolerance to what that is. I mean, I will say that occasionally I have thrown a kitchen sink, but I'm pretty strict, and it's 1%. Yeah. Okay, and I know at all times that I have at least 100 bullets in my gun. The other thing that I do is I try to, this is not about trading itself. Now, this is purely the money management aspect. Yes, you want to see your account grow, but you want it, that's my cat now, but you need to be enjoying the fruits of your labor should you be successful. If you don't do that, why are you doing it in the first place?
Yeah, I totally agree, Costa. Costa, can you, for people who want to follow you on Twitter there, it's Costa Mooney, right? Mooney?
Correct. Yeah, costamooney.com. So not .com, Costa Mooney at Twitter.
Yeah, and look, I don't know, man. I really appreciate your time there, giving all that time there to share that insight. I'm pretty sure a lot of people is going to wake them up to like a whole new universe of techniques and everything that's surrounding that ecosystem of being a trader, right? Like you said there, there's a trading, there's a capital management, the emotion management. But look, I don't know how many of this is probably going to be released in a couple of podcasts. I don't know how I'm going to edit it, but definitely we're going to have to redo it, because I feel bad that Kevin wasn't there. So if you don't mind, at some other date there, we could hook up again and continue the journey in harmonics. There
is so much I could talk about and express and actually share. And because I have to say, this is good for me too, in talking about it and expressing and sharing that, my experiences, my knowledge, and any insight that I can offer to someone else, because it checks it for me. Yeah. while I'm doing it. And it's good to give stuff back anyway. You know, I'm a firm believer in that. If people want to follow me on Twitter, great. It might encourage me to post more charts.
Yeah, well, I'm definitely gonna snoop around there. It's yeah, we keep learning, man. That's why we do. That's why we wake up every morning to learn something new there.
I think so.
All right. Thank you again, Costa, and we'll touch base, and we'll have you on back with Kevin next time. Thank you.
Brilliant. Loved my time here. Cheers, Patrick.
Cheers.